Yo, yo, what's going on, folks? I hope we all had an amazing weekend. Well, it was a great time to rest, relax, celebrate good times, celebrate holding AMC. Well, now that we're relaxed, we're ready to go, we have some interesting things to cover today. As you can tell, right now I am on Webull looking at the January 21st, 2022 open interest. And what we have down here, and I'm not sure why it's not showing everything. I'm just scrolled over too much. I'll actually just jump back to calls. 145 strike. Open interest of 209,617. That is freaking massive, guys. Absolutely massive. I just want to start the video on a happy note because what's going on right now with AMC, we want to go back to the ticker here, is very interesting, guys. So first of all, we are just going to start the video off with a quick technical analysis, go over the high level, just support, resistance, and generalized areas that I'm looking for the rest of the week. We're also going to look at the 1 hour chart with the Wyckoff accumulation schematic. This actually does look really nice and almost a picture perfect accumulation if you ask me. Additionally, a few interesting things that are going on in the news with AMC, but let's just get into it. Let's get nice and dirty, folks. Anyways, terrible joke. But so what we're looking at right now, I do have a couple areas highlighted. So specifically on Friday, yes, Friday, we got a little dip into that $19 area at $19.51. Now, I know, guys, no one likes to see the teens, but it's okay. I really think this type of price action needs to happen for us to reach those all-time highs again. We'll jump into why that is, but we'll just start with the quick TA. So what we have first is this descending area here. This was first established on 12.8. We also see a touch point here on 12.21, again on 12.30, and now we're in this area. So what I really want to see is for this to be broken in the near time future. And just looking back at historical price movements with AMC, I mean, here on this channel at least, we've been covering the stock for like 7-ish months, something like that. It's crazy, time flies. But typically AMC, Miss Amy, loves to break out on that fourth attempt. And that's exactly what we're coming up over in this area. So we'll see what happens. But leading into tomorrow, which of course is Tuesday, I know a lot of people are just excited to get back to trading. Today honestly sucked not watching the market, if I'm being honest. Curious what you all do on a day when stocks don't trade. Like, what? Crazy stuff. But anyways, going and looking into tomorrow, I'm a little bit bearish. And the reason being was, yeah, we did get that dip to 1950. And like we saw before on that dip to $20, we had volume go absolutely bananas. And I think we had like 104 million shares traded on 12/14. That was good from what we have seen in the past. But speaking for the history of AMC, I mean, look at this, guys. Over on these days, we're having, and specifically, we're going to look at 5/13. That was really the first big volume spike before the massive run-up. We had 294,000 shares traded on that day. Now, I know shares are probably not a thing that exists at this point in time with AMC. So that's why shares are low, whatever, dark pool trading, yada, yada, yada. But relatively speaking, guys, we didn't get the volume increase that I would have liked to see on this dip here to $19. So that's why I am a little bit bearish going into tomorrow. We'll jump back to that chart and show you exactly what I mean. So we did get an increase in volume, but it was still, relatively speaking, not high at all. And it looks like we're actually coming up on that 1 hour chart for a resistance around 20 million shares traded in an hour. So I would like to see that broken, which is why even through the rest of the day, volume kind of tapered off. I get it, it's Friday, but still it doesn't look great. So that's why my case for some downward pressure here into this gap fill of $16.84 and $17.31, that's really where I'm expecting AMC to fall. Now, I am personally leaning on the side of I think it's going to be a slow bleed this week into this area here because obviously with Max Payne, we know how they like to manipulate the options chain. It's just how it is. And with the open interest that I showed you for those 145 strikes for this Friday, they cannot afford to see price increase because that's where things get messy from a market maker's perspective. So they are really going to try to do everything they absolutely can to at least sustain the price at this level of $20, if not bring it down further, which I'm personally going on the story of I do expect lower, but hey, it is what it is. But we do have the gap fill, but it doesn't necessarily mean we need to fill this entire gap, or we don't have to fill it at all. Looking at the options chain, which we will jump into in a minute. Actually, I'll just bring this in right here with unusual whales. What are we seeing? Well, we saw a lot of these, or the popular strike at least. Where are we? Open increase, highest open interest increase. That's a tongue twister for me. For these $17 puts, had a change of like 4,400% last week. So that's pretty high to see. So that's why I think bears are absolutely targeting that $16, $17 range. We don't want to see these go in the money. That would not be the greatest thing, but we do have time on these expirations, 5/20/2022. Alternatively speaking, for bullish side of things, nothing too crazy, if I'm being honest here. You got the 20, the 32 had a decent amount of change. Those 5/20/2022s do look very attractive, looking at just the Greeks, the open interest, all of that good thing. But still, guys, not really the numbers we're looking for here. But nonetheless, jumping back to the chart, guys, the reason why I want to say that is, yes, the bears are going to target this. But let's jump back to Wyckoff, the understanding and the fundamental of this. The study of Wyckoff is they are trying to, A, shake out paper hands, but B, also trap those shorts in their position. So this absolutely looks like a clear downtrend that we've been in, and it looks like we are going to have that slow bleed, like I said, from a fundamental perspective into this area. But what I'm waiting for is for us to get into this area, maybe the $18, even $17 area, have a massive volume spike that traps those short positions, and then we start our climb back, breaking through trends, and just getting overall just freaking nasty in price movement. So, nonetheless, I guess that was a long rant to say what I'm waiting for is big volume increases. I'm looking for something of like over $200 million. I mean, $200 million. 200 million shares traded within the day. That would be my, I guess, confirmation bias that I need to show me that the low is in and we are absolutely about to start this next leg up. And like we showed in previous examples, we saw that in May when we had that 285 million day. That was the start of literally the entire June run up, in my opinion. But that's because the composite man really just picked up the last of his discounted shares before driving up the price substantially. So nonetheless, guys, we're going to break down this current Wyckoff accumulation schematic. First, we will start off with the chart. You know how it looks. That's how it is, baby. So we'll get this over here. And we'll kind of move AMC over here. Bear with me for a second while I get this set. All right. So what we have is picture perfect Wyckoff accumulation schematic. So you have your selling climax over here. This $20 first dip down is going to be your sell test in phase B. You make it up to the top end of your channel in phase B, and then you slowly start this choppy price action that just drives the price down. And as you can see from this descending level right here, like we talked at the beginning of the video, the same thing pretty much happens across phase B, where you just get this kind of slowly sloping down angle down to your phase C in spring action. So where I think we are right now in this schematic on the 1 hour chart at least, because guys, there are larger scale pictures that we have been discussing on the channel, is roughly in phase C or about to start phase C. This could have been Friday, and we could see this happen over the next couple of days. That would be the spring bringing us down into this 18 or anywhere from like $16 to $18 range. So that's where I think where we are on this 1 hour accumulation schematic. And once we do get that large increase in volume, that would confirm the spring for me right there. We'll test a couple areas over here. While I personally don't think there's going to be a lot of testing or LPSs that we're going to see with this, I think it's going to be a volatile move to the upside. It's going to be crazy, guys. Absolutely. I stand by that 110%. I mean, we could get slow tests, but I don't think that's going to happen, especially how much AMC has been beaten up over the past couple of months. And I guess even just looking from a fundamental perspective, I mean, holy shit, talk about box office records, boys. That is just wild stuff. So the way I imagine this playing out, we can see this dip into this territory over here. We'll get a rebound, kind of jump back into our range, a retest of right around like $20, I'd like to say. And then we make a test at this trend line here. Now, it's not the end of the world if we do get rejected at these levels. We'll probably just kind of bounce around until we do get that final influx of volume. Composite Man might want to just pick up a couple more shares before, bringing this thing to all-time highs. But this trend line right here is going to be our first obstacle. Now, as we get up, and we'll actually jump for the 1 day here, we do have this second descending area. This was first established on 6/29, and you can even say up here as well. So we'll just say middle-ish of June. We touched here on 9/13. This was kind of the fake out. Everyone thought we were going to the moon here, but on 11/8 got rejected again, and that's where we're kind of stumped down. But as we can see, guys, the further we do divert away from this downward trend here, that's when AMC does like to pick up and start the reversal and start another retest of this area. So sure, we might get dropped down a little bit more, but that is when we would start that move past this trend line and then hopefully past this trend line as well. So that's what I'm thinking for the rest of the week. I do believe Monday, Tuesday, Wednesday might be a little ugly, but maybe Thursday, Friday, things may pick up. But really, guys, the biggest thing I'm watching for is how we move with max pain. And of course, the biggest, most important thing is where is volume. We need to see that volume pick up, and it absolutely will. We just got to be patient for it. Now, I don't want to absolutely throw off the table of upside potential this week. I mean, obviously with AMC, guys, anything is possible. The one bullish case I absolutely have is we did, of course, this $20.57 area. That's the top of this area over here. It looks like the high was $20.36. So we did close above this area, which is really good to see. It means we respected it, we tested it, traded under it. Wasn't so comfortable because we had a little bit of volume come in on Friday. That's right. So the close above it is absolutely bullish. But the thing that just hurts me and turns me a little bit bearish for the short term of this is going to be the low volume on that, what we would hope to be a spring, because we want to see the volume increase on that spring. That's why everyone over here thought, hey, maybe this is the spring, and especially that Friday, 144 million. But nonetheless, it didn't play out. AMC doesn't make a lot of sense a lot of the time. We just kind of got to live with it. From technical levels, looking at the RSI and MACD, I mean, RSI has been beaten so badly for the past, honestly, since this point here, since like 11/8 when we had that almost breakout but got rejected. Pretty much from that point on, we've been under the 50 level on the RSI, and for the most part have been trading right around that oversold territory. A lot of people might think that's a bad thing, but I'm over here saying that it potentially is a good thing because it means on this next run, we have a lot of room to run. I mean, looking back here in May-ish timeframe, our low on the RSI was right around 4160. Didn't really give us that much room to run, and I mean, we still went absolutely bananas here. So being at 30, having the reversal start then, I'll freaking take it, boys. I'll take it. MACD, on the other hand, as we can see, these histograms are kind of just like dead for the most part. Let's see. We did have an increase from Thursday to Friday and actually since just about Wednesday as well. So we are getting increased histograms, which of course does play in the theory of more downside to come. The original theory we talked about at the beginning. But guys, that's totally fine because we still are in that negative territory with the RSI. Again, crossover to the upside. It's destiny. It's going to happen. It just takes time. We're going to wait for that bullish price action. But nonetheless, folks, we got a lot of other things to talk about. First, well, box office records yet again for, oh my God, I'm going to kill myself because I forget the name of this. The scary movie, whatever it is. Sorry, I forgot the name of that. But nonetheless, guys, that's awesome. Love to see it. Absolutely love to see AMC killing the box office and especially beating Spider-Man. That movie was so good. But hey, people want to get back to the movies. People need some date ideas. I myself need some as well. So that's great. But also, I came across this, which was super, super interesting. Of course, guys, the metaverse, virtual reality, all that stuff is really just popping off as of late. AMC, you know how we like to do it here. We like to go with the trends of just how the economy is doing and what's really popular. First, to start off with pushing cryptocurrencies, accepting Bitcoin, Ethereum, Shiba, Doge, a couple other ones. Shiba and Doge should be out relatively soon, I believe at the end of this month. But nonetheless, AMC is actually potentially moving towards virtual concert venues. So, personally speaking here, I think this is a brilliant thing. Of course, some people just don't want to travel with all these guidelines, with COVID, with all that stuff, to places to just go see a concert. I mean, it's incredibly, incredibly expensive. How cool would it be if you put on a VR headset, you go to an AMC theater, and you're just vibing with everyone at the concert? I mean, that's pretty cool. Of course, I need to see it to believe it. That's how I do it, at least. But certainly, I would be open to trying this all day. Curious what you all think on this, if this would be something you would try out. I mean, I'd love to hear about that. Nonetheless, guys, the biggest thing is AMC has the space. I mean, they have massive, massive venues with bajillions of square footage throughout their venues. So I think it's a possibility, and I think it would be a really trendy thing to really just jump on. So that was really, really cool. Now, the biggest thing, what's going on with the SEC's reform, and why are these hedge funds getting all up in the air about what the SEC is trying to do? Well, the biggest reason, I think this article, I'll link it in the description below, but this article did reference that if something like this were to pass, it would probably cause another GameStop AMC event that happened in January of 2021. So, obviously, they don't want that to happen because they barely scraped by the first time, and there's no way in hell they're actually going to survive a second one of these from happening. It's inevitable, we know that, but surprisingly, Gary Gensler and the rest of the SEC team is really trying to push more of the accurate reporting and all of that good stuff, which, of course, hedge funds don't want. Obviously, they're going to be up in airs about this. Because it's going to lead to a mess on their end, and they don't want to be cleaning that up. But the SEC, I think from just retail alone, I got to be honest with you guys, I really believe that we did push some change within the financial markets. Also, shout out Unusual Whales for being on, like, Joe Rogan and every single popular podcast and news broadcast out there talking about insider trading. I mean, a lot of this stuff is exposed. If a bunch of 20, 30, 40-year-old people who aren't in, JP Morgan type businesses or really just big financial institutions can figure out a lot of the wrongdoing within the financial systems, I mean, how the hell can you sit there and say, or the SEC can sit there and kind of turn a blind eye to this? We know and we see that it's messed up. Thousands and millions, well, not thousands, millions upon millions of people know it's all messed up. So there's only so many blind eyes that you can turn to this until something actually gets done. And I really hope that change like this is going to happen. But of course, guys, there's a lot of other players involved in this who are very influential to everything going on outside of financial markets, if you know what I mean. And I do believe specifically this said something about BlackRock not hopping on board with this. And we know BlackRock, right over here. Yeah, so BlackRock was going against this because they don't want something like this going in place. But nonetheless, guys, just give this a quick read. It's very interesting what's going on with the SEC right now. And just all in all, I know Charlie's Vids does a bunch of just documentations of what's going on with the SEC, with FINRA, all these other regulatory bodies. And there's a lot of changes that are coming. It's just a matter of time at this point in time. So we already went over the hot options open interest increases. Geez, I can't talk today, boys. And just some other good things about the $17 puts. I know those are not good things, but some bullish calls as well. Now, same thing in the options chain as of Friday. We did see a lot of further out expirations being played, specifically these 1/20/2023s, which was certainly interesting to see. Now, a little bit of bullish activity coming in, puts being sold, so that's why we could be at the bottom, but also, I mean, guys, a lot of bearish activity coming in. So that's why thesis kind of stands based on the options activity that we are going to see that $17, $18 range probably this week, if I'm being honest with you. So, just to end the video, guys, we're in a great place. This play is absolutely going to take time. We're close to the bottom, I can tell you that. I do strongly believe that if this is not the bottom right here, we are going to see it around that $17, $18 range, but it's going to be a fast move down, probably some type of wick movement down, reversal on the way up. That's what I'm really hoping for. But let's watch Max Payne this week. Let's watch these areas right here, and we'll see what happens. Anyways, it's so good to be back. Pumped for the markets to be open tomorrow. Let's go, and let's change the world. All right. Love you guys. Peace out.